Hello, everybody, and welcome to this week's MarketMaker.io Bitcoin market update. My name is Quinn, and today we're going to be talking about none other than Bitcoin. So, Bitcoin's currently trading at around $39,000, just under. New York Stock Exchange has not opened. It's going to be open in about 2 hours. So, the reason why I mentioned stocks is, of course, as you may have noticed, Bitcoin over the last month has become increasingly correlated with major stock indices, especially the likes of the Nasdaq, which is currently worryingly, concerningly making what looks to be a lower low. So if that correlation keeps up, and the Nasdaq dumps hard enough, we have to contend with the possibility here that this bullish high time frame market structure of higher highs and higher lows could potentially be broken if we get enough sell pressure and we actually make a lower low for Bitcoin as well, like with the Nasdaq. That bullish high time frame picture that most people who are quite bullish right now are looking to could be at risk of being broken. And historically, for both the Nasdaq and Bitcoin, this has meant continuation to the downside. So yeah, not too good. But so right now, as we talked about a couple of weeks ago, short-term holder cost basis, these are the guys that are responsible for moving Bitcoin mostly over the short term because they trade a whole lot. They accumulated on average or bought on average at around 47,000. We got rejected from there. We got bearish continuation. We got a rejection. We got further downside action. And right now, we're fighting for that $40,000 level, which is where where a good amount of long-term holders did accumulate over the past year. So we do want to see Bitcoin at least flip that $40,000 into support, get above it, and if we were in the bullish scenario, we would see that $47,000 level be taken once again, and turned into support if we were to see bullish continuation in the short term. So right now, to a little surprise with everything going on in the stock market, the dollar remains strong. Central banks overseas in Europe and other jurisdictions are just not tightening as much as the Fed. So money on the whole is still flowing into the dollar for refuge and safe assets like it, rather than risk-on assets like at least the market regards Bitcoin as. So credit default swaps on shorter-term bonds have seen a nice spike. They're at their highest level really since mid-2020 during the coronavirus crisis, which really highlights the heightened risk of a liquidity crunch or liquidity crisis, I should say, in the medium term. But remember, historically, this has not meant that stocks must enter immediately some kind of secular long-term bear market. You can have upside, you can have relief rallies. Bear in mind that on Monday, something to bear in mind for the likes of the Nasdaq and Bitcoin alike, because they're so correlated, is on Tuesday, we have the next FOMC meeting where, thankfully the market is already pricing in 50 basis points or more of interest rate hikes. Historically, or at least especially over the last year, these have become by the news events, right? So typically we see most of the fear build up just before the FOMC meeting. And once there's clarity, especially after the Fed has released some kind of communication giving forward guidance, we tend to see some kind of bounce. So while the chances here are increasing for some type of short-term relief rally, we have to contend for now with the fact that the Nasdaq is making lower lows. That's overwhelmingly the key factor here for now. But I want to step back and zoom out for a second and talk about one indicator that we've hosted on our social media channels recently, and that has been talked about a bit more lately, thankfully, is the fact that Bitcoin is still outperforming the Nasdaq. And it's a really telling chart because most doomsayers and most bears on Bitcoin and crypto in particular think heuristically about how if the stock market were to come down and crash in some type of liquidity crunch, how Bitcoin and crypto would fare even worse, right? So it makes sense because most people think of Bitcoin right now as some sort of leveraged play on the Nasdaq. You get more upside, but you also get more downside. But what we've seen that the trend here is actually, it's not supported by the data. So we actually see Bitcoin gaining steadily against the likes of the Nasdaq, and you see this wedge being formed. And you can also see how if this technical pattern holds up, we could see how in the next 6 to 9 months, there's a potential for this pattern to break. So historically, if it, as long as we're making higher highs and higher lows, I would be inclined, biased in favor of the pattern breaking to the upside. And it could be one way that, what it's telling me is that there is the possibility over the next 6 to 12 months that Bitcoin does break that correlation and in favor of the crypto community to the upside. So bear this chart in mind when anyone tells you that Bitcoin necessarily must, obviously, of course, no one knows the future, not financial advice. Bitcoin could have more downside than other assets. It could surprise, but for now, the data is speaking in favor of Bitcoin and crypto relative to the Nasdaq. And this pattern, I should say as well, holds up across all the major indices. It's the same sort of wedge being formed for the S&P 500 when measured against Bitcoin as well. So in the short term, we should flag that the real downside, the real risks right now also lie primarily with altcoins as well. So the last time Bitcoin dominance, right? So this is a measure of how much Bitcoin is dominating the overall crypto market cap. The last time the Bitcoin dominance was at this level was back in 2018 during the real depths of the bear market. So if we were to get this scenario of rapid downside moves with the Nasdaq, which could bring Bitcoin down and allow Bitcoin to make a lower low, that kind of downwards price action in Bitcoin has typically seen Bitcoin dominance increase. See, we saw in 2018 when Bitcoin price did crash a couple of times, Bitcoin dominance increased each of those times, and that means even more severe pain for altcoins. So, right now, we've been talking about how altcoins had been looking strong. ETH versus Bitcoin is holding up, but overall for the altcoin market, the downside here right now is shaping up to be, if we were to get downside, particularly painful for the altcoin market. So be careful out there, manage risk, and take care. Thanks, guys. See you next week.